and welcome to Granules India's earnings call for fourth quarter FY19. To discuss the business performance and to update financial parameters, we have Mr. Krishna Prasad Chigurupati, Chairman and Managing Director, Mr. K. Ganesh, CFO, and Priyanka Chigurupati, Executive Director of Granules Pharmaceutical Inc. We will begin this call with opening remarks from company's management, followed by question and answer session. Before we proceed with the call, please note some of the statements made in today's discussion may be forward-looking and must be viewed in conjunction with risks and uncertainties involved in our business. The safe harbor language contained in our press release also applicable for this conference call. The transcript of this call will be made available in our website shortly. With this, let me turn the call over to Mr. Prasad for his opening remarks. Thank you. Sir, over to you.
Thank you, Sumita. Good evening, ladies and gentlemen. Thank you very much for attending our earnings call for the fourth quarter of fiscal 2019. I'm pleased to report a year of good performance in terms of revenue and earnings growth, along with crossing some of the key business milestones such as completion of capacity enhancement plans and new product approvals. I will start with some highlights for the year just ended. We were able to successfully overcome the uncertain situation caused by price increases of key raw materials, which the industry was grappling with, without much impact. The prices are stable now, and we see a slow downward trend. As committed in the previous con call, I did pay back some of my personal debt and reduce the pledge from 60% to 43% of my shareholding. As already shared with all of you, I'll be reducing the debt and pledge further in the next 2 months. Before end of fiscal year 21, I expect the pledge to be zero. The important highlight of the year was that we set up our own front-end marketing in the U.S. and had already launched methocarbamol and metformin ER tablets under our own label. We ended FY19 with a small positive free cash flow as compared to a negative free cash flow of rupees 363 crores at the end of the last financial year. Sorry, it's 463 crores. We were successful in breaking the historic trend of negative free cash flows. The cash generated in FY19 was spent judiciously towards completion of capex programs, reduction of debt, fund additional working capital requirement, and dividend payout. With major capex completed, I am confident that we will build up a healthy cash positive position, which will not only mitigate any unforeseen risks, but will also reduce debt. 4 years ago, we had embarked on the journey to further strengthen our existing business and also to create alternative avenues for future growth. During this time period, the company had invested heavily on various initiatives to meet these objectives. With culmination of financial year 2019, we have completed all our major capex programs, and the stage is set to see the outcome of all our efforts. We are committed to putting our best efforts to leverage these assets. Paracetamol capacity is being used at 60%, metformin at 15%, and PFI at 25%. Guaifenesin had been validated, and after completion of stability, we will update our DMF. Metformin capacities are not being utilized fully because we are still waiting for US FDA approval. I'm happy to share that the FDA had announced an audit of the new metformin plant in July, and I'm certain that after the audit, the approval will be granted. There is no issue of regulatory approval for the new PFI capacity, and the utilization is picking up. As I mentioned in my previous earnings call, I again reiterate that the financial year 2018 was an aberration during which we have witnessed many challenges in terms of raw material price increases due to environmental issues in China and a fire accident in one of our key raw material supplier sites. Along with that, we have also written off certain obsolete inventory and started charging a portion of our R&D expense to P&L. The financial year 2019 is a true reflection of the progress made along the company's overall strategy. FY19 can be considered as a new base, and we are targeting a top-line CAGR of 20% plus and a bottom-line CAGR of 25% plus for the next 3-year period up to FY22. Let me go to the overall quarterly results. Let me first give you a financial and business perspective for the fourth quarter. The momentum of year-on-year growth that we have seen in the past 3 quarters continued in the fourth quarter as well. Q4 revenue was 613 crores, which is a year-on-year increase of 22%. The key driver for this growth is the increased sale of formulations in the North American market. When we see the sequential movement of revenue, there's a marginal decrease of 3%. This is because of our conscious decision to reduce the India-specific API sales. India-centric API sale is not margin accretive, and thus, with the reduction of this sale, our gross margin in percentage terms has improved. Comparison of EBITDA and PAT movement for the quarter year-on-year basis may not give the right picture because the fourth quarter of last year was an irregular quarter. For Q4 of FY18, there was a drop in EBITDA margins on a sequential basis. The reason for this is that the adoption of more conservative accounting approach, both in terms of R&D accounting and booking of higher provisions. As we have decided not to disclose the molecule-wise breakup, I can definitely update you on the 5 core molecule-driven business has witnessed an increase in sale of 20% compared to the same quarter of last year and has contributed 86% of our total revenue during the quarter. We achieved this growth purely based on the inherent stability of the molecules in our portfolio and our dedicated focus. We have already provided the sales breakup as per business verticals and regions in our investor presentation. The same is available on our website, so I'm not repeating it here. Full year result review. When we look at the full year performance, some of the key updates and trends are gross profit. The increased sale of APIs in the domestic market had led to a decline in the gross profit margins on a standalone basis. However, if we look at the margins at a group level, the increasing contribution from Granules Pharmaceuticals in the US has helped us protect our margins to some extent. Regulatory approvals of our expanded metformin capacity are awaited, and it is expected in the second half of current financial year, and once we get them, we can see a positive step towards increasing the gross margin. EBITDA. On a full year picture, EBITDA stood at 411 crores and an increase of 42% compared to last year. This shift in EBITDA is on account of a larger base of operations during the period. This was achieved despite lower utilization of plant capacities and recognition of higher R&D expense in the P&L. The other expense component had witnessed a year-on-year increase in terms of absolute value, which is nothing but a reflection of conservative accounting approach we are adopting. 2 major components of the other expense is increased R&D expense charged off to P&L and provisions for non-moving inventory, which has caused this increase. But actually, the other expense item as a percentage of sales has reduced compared to last year and has helped maintain the EBITDA margin. We expect that the non-moving inventory, which was 17 crores, will not be on the scale in future and can be treated as a one-off expense item. R&D expenses. The R&D expenses for fourth quarter were 41 crores compared to 32 crores during Q3. Out of the 41 crores expense for the quarter, we have charged 32 crores in the P&L and the balance of 9 crores has been capitalized. On a full year basis, the total spend on R&D was 127 crores, out of which 73 crores had been charged to the P&L and 54 crores has been capitalized. This represents 60% charged off as compared to 30% last year. This is a reflection of our changed approach to R&D accounting. PAT. I would like to dissect the growth in the PAT numbers in 3 different levels. On standalone basis, which is primarily our legacy molecules-driven business, which had observed a growth of 16%. Standalone business along with new APIs and contribution of our US generic business had witnessed a PAT growth of 52%. The group PAT, along with contribution of our JVs, which stood at 236 crores, witnessed an increase of 78% compared to last year. Finance cost had reduced by 4% year-on-year basis, which had also contributed towards improvement in PAT. However, if one compares the finance cost of Q4 of FY19 with Q4 of FY18, there is a marginal increase of rupees 60 lakhs. This is due to the increase in LIBOR rate during Q4 19, as all our working capital is US denominated. Debt. We are absolutely focused on our debt profile. We have seen a declining trend in the net debt position of the company during the financial year, barring the first quarter because of the drawdown of our last tranche of our ECB loan. The net debt position as on March 19 was 908 crores as compared to 941 crores at the end of December 18 and 1008 crores at the end of September 18. Long-term debt stood at 537 crores, a reduction of 25 crores, and short-term debt was 554 crores, a reduction of 27 crores as compared to Q3. We would like to emphasize we were able to reduce short-term working capital debt in spite of an increase in working capital requirements. Our net debt to EBITDA at the end of financial year 19 was 2.2 times as compared to 3 times at the beginning of the year. We are targeting to bring this close to approximately 1.5 times by the end of this fiscal year. Cash-to-cash cycle. I'm happy to share the progress we have made towards reducing the cash-to-cash cycle of the company. We have started the year with 120 days of working capital cycle, which we managed to reduce to 110 days by end of the year, which had helped in maintaining the downward trend in short-term debt. We are in touch with our key customers and a selected set of suppliers to see what best possible payment terms can be achieved, which will help us maintain the working capital cycle. This is a cycle which moves in tandem with business cycles and can be impacted by macro factors and hence would be pursued on a continuous basis to align with the industry trends. Product filings. We have filed 2 DMFs with the US FDA and CEPs with EDQM for APIs in the financial year 2019 to support potential ANDA and dossier registration filings. In the finished dosage forms, we have submitted a total of 12 ANDAs in FY19. We are expecting the same momentum as last year and expect to file 10 to 12 ANDAs in the current year. Update on multiple API and Onco facility. Validations of Onco APIs are going on. 2 DMFs have been filed from this unit, and as we keep completing stability of other APIs under validation, we will file more DMFs. Validations of formulations have started. U.S. Generics Division, Commercial Operations. The financial year 2019 marked the first year of operation for Granules Pharmaceutical Inc., our U.S. Generics Division, which focuses on R&D, manufacturing, and marketing in the U.S. market. So far from this division, we have filed 17 ANDAs, out of which 9 ANDAs were filed during financial year 19. We have so far received approval for only 2 ANDAs and others are pending approval. Of the 2 already approved, Methergine generic was launched in the first quarter of FY19, and the next one, a generic of Methadate, which is a controlled substance, will be launched by July. We will be launching both these products under our own label. For the financial year 2019, GPI reported revenue of 195 crores with EBITDA of 76 crores and PAT of 40 crores. Joint ventures. As expected, the joint ventures collectively contributed 19 crores to PAT during the current quarter as compared to 2 crores in the previous quarter. For the year, Granules Biocross has contributed 45 crores and Granules Omnichem had contributed 4 crores to PAT. Together, they had contributed 49 crores as compared to the projection of 40 crores. We are very confident that together they'll contribute the same or better numbers next year. Board composition. I'm happy to share with you that we had broad-based our board with addition of new members as independent directors. Mr. Arun Soni, Mr. Robert George Kernard, and Ms. Jyoti Prasad have joined us during the year, and I'm sure their significant industry experience will help provide shaping the future of Granules. I would like to acknowledge and place on record my deepest appreciation for the support and guidance provided by our 3 retired independent directors, Mr. L.S. Sharma, Mr. A.P. Kurian, and Mr. Krishna Ella. They had played an important role in shaping the company over the past 2 decades. As you are aware, Mr. Ganesh, our CFO, had decided to seek newer and more challenging opportunities elsewhere, and the board has accepted his resignation. I would like to acknowledge and place on record my appreciation for his contribution to Granules in the last 2 years. I would like to end by expressing my confidence that we had laid the groundwork for a sustained growth, and this will be reflected in our performance going forward. The team at Granules remains dedicated to its commitment in achieving the targets we have laid out for ourselves. With this, ladies and gentlemen, I would like to open the call for questions.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from the line of Ashwini Agarwal from Ashmore Investment Management. Please go ahead.
Hi, wonderful results. Congratulations. Couple of questions. First is that what is the remaining capex plan? From the original large capex that we've incurred over the last 3 or 4 years. So, what would be the capex budget for fiscal 20 and fiscal 21?
The capex towards the planned expansions is all completed, Ashwini.
Mm-hmm.
And the capex going forward for this year, current year, is the normal capex, and we expect this to be 80 crores.
And it would be a similar number as a percentage of revenues in the following financial year as well?
Yes, that's right. This is in GIL alone. Sorry, Ashwini, this is GIL, 80 crores. And GPI, like we said in the past, the Board of Granules India had passed a resolution investing some amount towards providing some extra facilities in GPI. And this should be, the approval is for $10 million. 15 million, 5 million was already paid out. And 10 million is there. And we'll be using some of this 10 million for creating extra capacities at the US facility to cater to the products that are going to be commercialized.
Okay.
So
and
it could be altogether a maximum of 150 crores.
150 crores together. Okay, great. Thank you. And the R&D, the R&D that is being capitalized, this is essentially the filing fee, and this will be kind of reevaluated at the end of each year and either written off or carried forward basis the status of each underlying molecule.
You are right, Ashwini. We have actually, wherever we have completed biostudy, pivotal biostudy successfully and filed ANDA, those molecules we have capitalized. As per accounting standard, every year we need to do an impairment testing, and we have already given the impairment testing results to our auditors. So it has been tested for the current financial year, and there is no impairment which is taken.
Okay, wonderful. And the debt reduction to, net debt to EBITDA target of 1.5, this is actually going to be great because this implies a significant reduction in debt. Obviously, some of it will come in from EBITDA growth, but if I work the numbers backward, would it be fair for me to expect about, say, 150 crores odd of debt repayment on a net basis for the current financial year?
Our ECB loan repayment would actually start, and that's going to be roughly something like in the range of 6.5, 50 crore would be the total repayment that will happen every year. The moratorium is over and now the repayment would start.
Okay. Okay.
We actually expect debt to be below 900 crores by end of this fiscal, and with a combination of increased EBITDA and this, we definitely are sure that it will go around 1.5 times.
1.5 times. And Okay. And you've already given a very strong guidance to reducing the pledge on the promoter shares and bringing that down to 0 by March 21. So, this is also great news, and thank you so much for providing such a firm guidance. All the best. I look forward to being in touch.
Thank you very much.
Thank you, sir. We have a next question from the line of Bharat Seli from Equirus Securities. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity. So I have a couple of, to begin with. So we have done some provisioning for non-moving inventory. So I just wanted to know in which quarter is it lying?
No, this has been like every quarter we make a provision, and now in the full year accounts it will be actually disclosed in the notes forming part of inventory.
Sure. So is it how much it would be in the fourth quarter?
8 crore.
That will be only in the last fourth quarter, right?
And this has been shown in other expense.
Right. Understood. And so second one largely related to your ibuprofen. So Biocause has done phenomenal well during this year, and that could be one of the reasons because of ibuprofen prices increasing. So just wanted to have an understanding how ibuprofen prices are moving now towards the fourth quarter, and since we are already almost half a quarter done. So if you could give some color on ibuprofen prices.
Ibuprofen prices are holding up, Bharat, and we expect that they will hold into middle of next year at least. And we also have not only gotten benefit from increased prices, but there have been also some improvements in production and also the output. Output also has increased. When we took a shutdown 2 quarters ago, we have also increased a little bit of the capacity. So it's a contribution by both increased prices and increased capacity. So we do expect the prices to hold, and definitely this is not, last year was not a one-off, and this year definitely the performance of Biocause will be really good. And going forward, between both these JVs put together, we see a fairly good contribution coming in. 1 year, something may go down, the other years, the other one will go down, this will go up. But together, we see this contribution increasing as we go by.
Surely. So can you share what would be our utilization for Biocause for FY18-19, if you could provide some?
Biocause FY19, of course, if you remove the period for the shutdown, Biocause is operating pretty much at 90-95%.
And last year, it was around the same number?
So last year was lesser. It was about, I would say, less by 20%.
Understood. Sorry?
The output was less by 20% last year.
Right.
It's not 20% less on capacity, but the output.
Right. And so last one on the 5 main molecules. So can you provide, in this presentation, it is pretty helpful that you have provided for full number. It will be, again, really helpful if you could provide only for fourth quarter. What would be the number for these 5 molecules, largely?
It's 550 crores, Bharat.
How much?
550 crores.
550 crores.
That's
understood. Right. And so, just if I can press one more, how are so what we are looking in the U.S. market? How many areas we are targeting to launch in this year, and what sort of opportunities are those? Is there any opportunity which is equivalent to the size of what we have in terms of metformin? In terms of metformin?
Priyanka, do you want to take that?
Can you hear me?
Yeah.
Yeah.
Hi. We have about 3 to 5 additional launches happening during the later part of the year. In terms of the numbers, we won't get into the product level details, but to answer your question, on a whole year basis, yes, we do have some products that will equal the metformin numbers.
Sure. So you won't see the entire value in this fiscal year, because some of the products are being launched during the later part of this year. Sure. So you are saying that there are individual products which are equivalent to what metformin would be for in standalone, right?
Well, Yes, and I would also want to just reiterate that the potential, it also depends on the approval timeline. So as of now, as of our estimated approval launch timelines, we do expect those numbers. But again, it's in the hands of the FDA.
Sure. Thanks a lot.
Thank you. Participants, in the interest of time and fairness to all participants, please restrict questions to 2 per participant. If you still have more questions, kindly join the queue afresh. We have a next question from the line of Ranjit Kapadia from Centrum Broking. Please go ahead.
Good afternoon and hearty congratulations for good set of numbers. I have 2 questions. First is what is the optimum utilization of API, PFI and FD at this stage? And my second question refers to metformin. What is the demand supply global outlook for this product?
Okay, thanks a lot, Ranjit. The optimum utilization of APIs, paracetamol, what I said was going at 60% of the expanded capacity, but overall, we are using the capacity to about 85% paracetamol. Metformin, the old plants where we produce are going at 100%, and the new capacity, like I mentioned in my opening speech, is only 15%. And like I also mentioned, we are expecting possibly the inspection and the approval to come in the second to third quarter, and with that we expect to go to up to at least 70% of our overall capacity. Guaifenesin, the old plant is running at full capacity. The new plant, the validations have been done and the products are under stability. Once stability is done, we'll update our DMF. And again, there will be an issue of customer approvals and regulatory approvals, and we'll take it up. And regarding metformin and the global situation, looks like it's growing at 5 to, I think it's around 8 to 10% overall growth. And in the U.S. market, it's about 7-8%. And we are constantly increasing our market share. And as of today, we believe we have at least 50% market share in the United States for our tablets.
And sir, what is the market share of paracetamol globally?
Globally, we have something like about, I would say, 18% on this.
Okay. 18%, 1/8.
1/8.
Yeah, globally.
That's right. But if you talk of the regulated markets, I would say we are somewhere at around 30%.
Okay. And sir, can you just explain the margin expansion, because we have seen a good amount of margin expansion of almost 740 basis points during the quarter. So if you can throw some light on this.
It's mainly due to increased sale of FD, which and again which have gone to the U.S. market. If you have seen our presentation, U.S. North America today is at around 50% of our revenue, and FDs are at 45% of our revenues. So this is what was the main contributor for increased profit margins. And going forward, if you have seen the entire quarter-on-quarter, there's been a steady increase in finished dosage output or sales, and we expect this to continue going forward, and hence the further expansion of profit margins.
And sir, any more major capex is remaining now?
The original intended capex is all completed, and it's going to be routine maintenance capex, except for GPI capex, the US capex, for expansion of capacities for the launches that have to be made. This we have been discussing over the last few quarters. We have not done it at that time, but we should be doing it in phases this year.
So we have added 2 more molecules. One is in the anti-allergic segment, fexofenadine and Cetrizine. So in this year, how many molecules are expected to be added?
This year, we recently got approval of paracetamol extended release in the U.S. That's from India. And then we expect approvals of loratadine. So both these will be commercialized from India this year. And in the U.S., like Priyanka was saying a while ago, we expect about 3 to 5 launches from the U.S., out of the U.S. portfolio manufactured in the U.S.
Okay, thank you very much and wish you all the very best.
Thank you, Ranjit.
Thank you, sir. Participants, please restrict questions to 2 per participant. We have a next question from the line of Tushar Bora from MK Ventures. Please go ahead.
Yeah, thank you so much for the opportunity. And sir, congratulations for an excellent set of numbers. Couple of questions. On the working capital side, we've seen a meaningful reduction in receivables days this year compared to FY18, right? And our working capital and debt have both trended down as management has guided. Just want to understand whether there's an element of receivables discounting or factoring any kind of balance sheet measure that we've taken specifically. If so, how much? And if you can just give a bit more qualitative commentary around the working capital, please.
Okay, thank you, Tushar. We do discount our bills with the bank, and this is a practice that has been going on from the beginning. And factoring, definitely not. We would love to do some factoring, but definitely the prices are high and it doesn't make sense for us. So absolutely no factoring. And the increase, the reduction in borrowing is because of the efficient working. And if you have noticed in my speech, I said that our cash-to-cash cycle has reduced by 10 days from 120 days to 110 days. And we are still working on it, and we expect to improve it a little bit more.
So our receivables would be sustainable at 110 or maybe can come down further? Is how we should look at, sir?
So this is a cash-to-cash cycle. So it's a mix of receivables and payables and everything put together. And yes, we do give a long-term credit in the Latin American market, and we are trying to negotiate with people to bring it down. And it is sustainable, and it can definitely be improved a bit.
Okay. So before I ask my second question, just quickly clarifying on the debt, how much have we guided for debt reduction this year? I missed that part. It was not very clear.
The net debt today is at 908 crores. We expect at least to go to 850 crores. And this is in spite of increased requirement of working capital. Because of the increased turnover we propose, we are expecting 20% increase in revenue, which will need more working capital. So 850 crores should be the net debt position by end of the year.
So if I may just take a minute on this, and just to take some hypothetical numbers, assuming about 20% on our current base, our revenue would go up by about 475 odd crores, 475 in that range, I think.
That's right.
And if we look at the overall EBITDA, if we are able to work on similar numbers as what we've done this year, assuming a 20% growth on EBITDA on a base of 411, around 500 is, if I'm assuming, just bear with me, sir. I'm just trying to understand the cash generation and utilization to put it in perspective. So about 500 crores of EBITDA is what we're saying for this year, 475 to 500 in that range. About 25 crores would be our finance cost base if I am able to take it on current run rate. About 110 crores depreciation on current run rate. And about 25% tax rate if I'm assuming for the year. We would still, plus I'm adding some profit from the subsidiaries in JV, we should have in the region of about maybe about 150 odd crore capital left even after assuming for capex. So where are we going wrong? Are we being conservative when we say a debt reduction of 50? Is it possible that it may be reasonably north of 100 also?
It's possible, Tushar, definitely. And yes, thank you very much for all the calculations. We are really close to what we were actually working out ourselves. But what I suggest is, it's possible to go below 850. And what I suggest is if you and Sumanta can get in touch with you and explain in detail and go into detailed workings. Yes, definitely it's possible. That much is what I can say.
Sure, sir. Just scheduled questions, one more, if I may. If you can explain a bit more on what's, Omnichem, it's been an investment that we've sort of made for many years now. I think 2013 is when we first started working. We're still not getting the same kind of profitability or, traction in this particular segment business for us. If you can just help us understand what's caused delay in realization of profits from Omnichem, and what are some of the initiatives we are taking to address those, and by when can we actually see Omnichem contributing meaningfully to profits?
Actually, Tushar, compared to last year, there's been an increase in revenues and profitability, but like you said, it's still not good enough. We are far away from the desired number. This has been a little cyclical, and actually one of the biggest customers they had suddenly they realized they had some surplus capacity in their plants in Singapore, and they took away the products from us. And that has really hit us. We are trying hard to overcome that. And that particular product was taking up a lot of our capacity. And now suddenly we find ourselves with not too much capacity, too much work. And whatever we're filling up, these product margins are lesser than what we had in the past. So we are working towards getting products with higher profit margins. And I think it will take a year or two more to see some decent numbers in our Omnichem JV. However, like I was specifically saying, Biocause will do well, and between both these JVs going forward too, we should see some good numbers coming in.
Right. Thank you so much, sir. I'll join back in the queue.
Thank you.
Thank you, sir. We have next question from the line of Rashmi Sancheti from Anand Rathi. Please go ahead.
Yeah. Thanks for the opportunity and good evening to all. Sir, again on Omnichem, on the joint venture profits, you mentioned that, this year also Biocause will be giving a good performance and there would be a slight improvement in the Omnichem numbers also. So don't you think that, we would be able to do, we would be getting earnings more than 49 crores from the JV?
It is definitely possible, and Rashmi, but I think I would prefer to be a little more conservative and cautious in giving guidance. Yes, it is possible.
Okay. And sir, another thing on Omnichem, our EBITDA margins are around 15%. However, PAT margins are just 4%. So what is dragging down the PAT? Is it high interest or depreciation or higher taxes?
It is basically interest, depreciation, and also the deferred tax. Ganesh, would you like to explain before we try?
Actually, we didn't recognize MAT credit this year because we want certainty of profits to absorb MAT credit. So to the extent of roughly 6 crores, we have actually not taken the MAT credit. For us, that's number one. And second, in terms of revenues, it is still hovering around 200 crores. So like a larger revenue, we could actually improve the profitability.
Okay.
Rashmi, it's mostly based on the recognition of MAT credit.
Okay. So basically, if that improves, then the PAT margins will also improve to say 9-10%, taking into account if 15% is sustainable EBITDA margin for Omnichem.
Yes, it would.
Okay. And sir, another thing on...
They conservative. They don't want to take in some credits.
Pardon?
They've been conservative on not taking the credit for the match.
Okay. Okay. And sir, on the US part, how much would be the total cumulative ANDA filings till date, including both India and GPI?
We have a total of 17 filings made from GPI. And from India, we have, let me just go back to CMD speech.
It's the same, Priyanka, altogether so far.
Okay. The total of 17 filings.
Total 17 filings from India and GPI both?
No. Rashmi, let me take that. It's total of 32 filings. 15 are from India and 17 are from GPI.
Okay. And sir, what about
17? 9 were filed in the last fiscal 19.
Okay. And sir, what about approvals?
Approvals, we have 2 out of all these files so far, and we expect 3 to 5 approvals this year.
Okay. And launches, we are expecting around 3 to 5 from GPI and 1 or 2 from India.
That's right.
Okay. And sir, related to this oncology block, when it will be ready, the validation batches and everything is started, but when would it trigger inspection and, how much time will it take for the commercialization?
Okay, Rashmi, we on the API side, we are continuously validating different products. So instead of stopping with one, we are going on validating. And by the end of this year, we'll have a very nice basket of products, APIs. And we are planning, now we are validating the FD section. And this particular product which we are validating, once we file with FDA, and we also plan to file in Europe, and which will take at least another 8 months or 9 months. And at that time, after that, we expect an inspection. So it will go beyond a year at least, Rashmi. And so meanwhile, like I always said, we may try and sell some of these products in the emerging markets and within India.
And how many products are there in the pipeline only for oncology?
Oncology APIs, we have a pipeline of about 7 products which we are working on, and formulations about 3 products.
Formulation 3 products.
That's
and
right.
Sir, how much would be the US revenue out of your total fixed dosage sales? If you can tell me in the percentage for this entire year, FY19.
Through GPI, we did 200 crores.
Okay.
That is, the other entity is basically our marketing, so the number gets consolidated with me.
Yeah, so if you can just give a, approximate figure, like, out of your total FD sales of 1,076 crores, how much would be, from India and GPI put together?
You can just take GPI as the 200. The rest is all from Granules and Granules USA.
Okay. And thanks, that's helpful. And again, lastly, on the debt side, you mentioned that, around 50 to 60 crores reduction will be there in long-term debt. However, your working capital loans would increase because of the new blocks coming in place. So roughly, what I understand that, currently, if I put together your long-term, short-term, your gross borrowings are total around at 990 crores. So that would remain at the same level because of the increase in working capital loans, or it would reduce?
Actually, Rashmi, the short-term borrowing, we don't expect them to increase. We expect the increased requirements to be met through internal accruals and efficiency in bringing down the working capital cycle.
Okay.
So we do expect it will not increase.
Okay, so it would remain more or less at the same level.
That's right. We don't see reduction, but definitely we don't want to see it increase.
Okay. Thanks, that's it from my side.
Yeah.
Thank you. Participants, kindly restrict questions to 2 per participant. We have a next question from the line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead.
Sir, if you can just help me first with this breakdown of other income for full year FY19.
The other income has roughly 14 crores of forex, and we have certain interest income of 7 crores, and there are certain other non-operating income, like sale of scrap things like that, to the tune of 7 crores.
Okay. And so that was on the bookkeeping. Now this, so around 86-87% still is contribution by the top 5 molecules on the top line. So how do you see this number going down for next 3 years?
What is happening, Tushar, is we are increasing sales of these 5 molecules too. We did expand our capacities for these 5 molecules, and as absolute numbers increase, the ratio, the other products also will be increasing, but we expect the ratio to be almost the same, at least for the next 2 years.
So basically even these molecules to grow at about 20%.
That's right. Yes. These molecules we already have, except Metformin, we have all approvals in place, we have customers, and it's just a natural progression. Whereas for other molecules, there's a time lag.
Okay. And these 2 approved ANDAs are from which site? Is it, I missed out, is it from India or from GPI?
From the US facility.
Okay. And lastly, on the other API side, like, so are we there in this losartan product category?
Yes, we are there, Tushar, and we have been doing very well on losartan. In fact, we have and our product, the route of synthesis is such that we don't have these xenotoxic impurities, and we are actually looking at the possibility of expanding our capacities on losartan.
So at present, how much is it, if you can just help us on, like, what is the current capacity? What is the overall market volumes?
The current capacity is about, I would say, about 7.5 tons per month. We are looking at if we can increase it to 15 tons. And market volumes, I don't think I have a number. The market, I may not have a number right now.
Oh, okay. But then
And we are a small fraction, we are a small percentage of the world demand. That's what I can say.
So safety assume like 10%, 15% or even lesser than that?
Will be lesser than that. But we expect to keep, whenever we select a molecule and we decide that we want to get a leadership position, we go all out. So this is the first small step, doubling the capacity, and we would like to see that we get a prominent market share as we go by.
And whatever the capex for this is included in your
normal capex. Yes, it's not anything extra.
Understood. And so in the other API, which now you don't provide product-wise details, but let's say till first of FY19 you used to. So if I may ask, the other API, this losartan contribution would have been how much?
Losartan today is hardly, I would say 10 to 12%. And
10 to 12%
of the revenues of the other APIs, not the total revenue from other APIs, which is around 280 crores or so. So 12-13% out of that will amount to about exact number is around 30 crores.
Okay. Got it. That helps. Thanks a lot.
Okay.
Thank you, sir. We have next question from the line of Pragya Vishwakarma from Edelweiss Financial Services. Please go ahead.
Yeah. Hello, sir. Just one question on Omnichem. As you mentioned, we had a setback because one of the biggest customers pulled the product because they had surplus capacity. Just qualitatively, if you can let us know what are the practices or what are the steps have we taken to avoid such a situation in Omnichem in future?
Thank you, Pragya. Yes, you have a very important point here. What we have done is we were totally dependent on this customer in the past, and when they pulled out, we realized that we have made a big mistake, dependency on one particular customer, one particular product. We have about 6 products that are validated in the plant and business has started. But however, these are products with small margins, but we always thought it's better to broad base our portfolio rather than just depend on 1 or 2 high margin items. So we are trying to bring in some efficiencies to build up margins, and also we are constantly scouting for products with better margins. Whatever we do, we will have at least 6-7 products running in the plant at any time with at least 3 to 4 customers.
Okay. And so currently also we have around 5-6 products with us, and as you stated, more number of customers.
Yeah, that's what we have today already. But what we're trying to do is we're trying to rationalize the mix a bit by getting in more high margin products.
Okay. And we do not have any, in terms of your contracts with these customers, it is not a take or pay kind of a contract, or how do we hedge ourselves on that term?
Unfortunately, except in very, very special cases, which are in early stage development, none of the big pharma gives a contract like take or pay. If it's early stage, definitely it's a take or pay.
Okay.
And we're not in the early stage development.
Okay. Thank you, sir. Thank you so much.
Thank you.
Thank you. We have next question from the line of Harith Ahmad from Spark Capital. Please go ahead.
Hi. Good evening. Can you provide a guidance on your expected R&D spending in FY20, both the expense part as well as the capitalized part? And will we be looking at expensing a higher percent compared to the 60% of the total spending which was expensed this year?
So we expect that we will be doing R&D spend of about 175 crores, and we definitely will be writing off a little more than 60%. Definitely not less than that. It will be higher. We have a formula. Our auditors also sit with us and analyze this. Based on the policy, I definitely think it will be more than 60% write-off.
Okay. And when you gave the capex guidance of 150 crores for FY20, this was excluding the capitalized part of R&D, right?
Yes.
Okay. And can you also provide the overall capex figure for FY19, including the R&D part?
1 minute, I'm just getting the number. It's 315 crores. 1 minute, please. On a consolidated level, it's 271 crores.
271 crores. Okay. The capital work in progress, the tangible part on your balance sheet as of March 19, around 325 crores. So which facility is this pertaining to, and how should we look at this number going forward? Or when should we expect this to get capitalized? And then which facility is this related to?
This is predominantly our oncology unit at Vizag. The plant validations are going on, and based on commercialization of the products out of this unit, we will actually go and capitalize it.
So, any particular quarter during the year that you would like to guide us to?
Possibly Q3.
Okay.
Q3.
Yeah. And last one from my side, if I heard you correctly, the PFI capacity utilization for the year was around 25%. And we didn't see much of growth in the segment, both in terms of volumes and revenues. So what's holding things back here in this segment, given we have expanded capacities, and how should we look at growth from this segment?
Okay. PFI is a precursor to finished dosages. If you want to make a finished dosage, you need to make a PFI. So all the PFI that we are making today is going towards finished dosages. So any extra production of finished dosages will also entail an extra production of PFIs. So since PFIs, most of our customers who are in PFIs are moving towards FDs. So we don't see a great increase in PFI sales in future. We will definitely see FD sales.
All right.
And the PFI capacity will be used for FDs.
Okay. Thanks a lot.
Thank you.
Thank you, sir. We have next question from the line of Sri Hari from CCS Securities. Please go ahead.
Yeah, thanks for the opportunity. Firstly, if you could let us know what is the swing on account of inventory and the incremental research expenditure for Q4 versus Q3?
Can you repeat that, Ranjit?
Yeah, inventory write-off of 17 crores that you had. 8 crores in Q4, right?
Yeah, actually, this is based on our inventory policy, which is determined by expiry of products and slow moving. So, based on the provision, certain finished dosages are getting expired. So, we have to actually take a hit in Q4. The amount is totally 8 crores. And our policy states R&D inventory we will write off. The finished dosage.
No, I mean, the figure that I wanted was the incremental on these two accounts, sir. Basically, inventory write-off and research, Q4 versus Q3.
Q4 versus Q3. It is 8 crores.
Q3 was how much?
4 crores.
4 crores. That's as far as inventory is concerned. And for research?
That's a lot. So you have the R&D section 64.
You wrote off 32 crore during the quarter, right?
2 in this quarter, 14 in the previous quarter.
Okay, so that makes it 18 plus 4. That's about 22 crore incremental.
You are right.
Okay. Yeah, and secondly, on the production side, I noticed that your formulation production has shot up to nearly 3 billion tablets. So is there a significant inventory pile up there?
No, I think definitely not. There was a little bit of stock in the past which was written off, and there's absolutely no inventory pile up.
No, I meant to say in the
end of the quarter, you mean?
Yeah, it's about 3 billion tablets vis-a-vis 2.4 billion in the previous 2 quarters.
Yeah.
So is it for some prospective product that you're ramping up production?
No, these are our regular products where we are getting a better market share.
Yeah, but then the jump is significant in terms of production, about 25% higher production. So
It's a growth. It's a growth that we have received. We've got some fresh businesses that we got in, and also if you see, we have launched our metformin and metoprolol in the US, marketing through GPI. Even those products are getting a good market share, and we are increasing our production.
Okay, fine. Okay, I have more questions. I'll jump back. Thank you.
Thank you.
Thank you, sir. We have next question from the line of Chirag Patel from Atom Investments. Please go ahead.
Oh, hi. Thanks for taking my question. So, yeah, improving set of numbers, definitely. I've got a couple of questions. One is to do with your return on capital employed, and the other one is to do with free cash or maintenance capex. So the first one is, if I look at the last 10-year trend of your ROCE, it has kind of fluctuated quite a bit from high single digit to almost 20% few years back before you started this heavy capex. So may I ask what's the current ROCE and the cost of capital, and where do you see both of them over the next couple of years, please?
ROCE at the end of FY19 was 13.9, and end of March 18 was 11.7. And whenever we see fresh investment coming in, ROCE normally drops. And when as we are sweating our assets more and more, it definitely goes to very, very high levels. And we do expect that the 13.9 will definitely improve by end of the current fiscal.
So do you expect to go back to 20% or 18% anytime in near future, or is it a distance?
In next few years, definitely, Chirag. Maybe 2 to 3 years, definitely. 3 years.
Closer to 20%? Closer to 20%?
Yes.
Okay. So thank you for that. And the next one is, so you have incurred a significant capex. So based on what you have done, what will be your ongoing capex just to maintain those facilities? If you could just remind the number again, and how much free cash you aim to generate this FY20 as well as FY21. I heard in your opening remarks that you have reported some marginal free cash in FY19.
I think I've answered this capex a little while before. We expect 80 crores in GPI, that's maintenance capex. In India, 80 crores. And in GPI, we are budgeting for about $10 million, which is about 70 crores, which is to build in extra capacity to cater to the new approvals that are likely this year and next year. That's the capex. And the other question on free cash flow, you mentioned, we did. The satisfaction is at least we got out of the trend of negative cash flows, free cash flows, and we came to 1 crore positive this year end. And we do expect we will improve in a I would say very good way by end of this year. I could ask Sumanta to get in touch with you and give the workings and give you the exact number. I don't think I will have the exact number as of today.
No, that's absolutely fine. That's helpful. So just to double check, on an ongoing basis, is it fair to assume 100 to 120 crores of maintenance capex? No growth, but just to maintain those facilities.
Yes, you're right. That much we will need. There will be some balancing here and there. Yes, that is what we will need.
Okay. Thank you so much, and all the very best.
Thank you.
Thank you. Ladies and gentlemen, that was the last question. On behalf of Granules India Limited, that concludes this conference call.